you all know me as someone who said I'm going to start buying at 2,400 to 2,500 on the S&P, and that was a good move. But I absolutely did not expect this just very, very violent kind of snapback on equities. And there's just so much going on and so much government stimulus that I think some of that makes sense, but it also means that we're not cheap, right? Things aren't cheap. And what do I like buying? I like buying cheap stocks, and I like buying, as an analyst. And again, and people, those of you, a lot of you asked me if I've seen Charlie Marr rip on me this week. I think that's excuse my French, but that's fucking hilarious. Raise your hand if you've gotten, a lot of money being paid to you. It's funny because he called me out, and I'm gonna do this for TikTok because we're having issues on YouTube. TikTok at a couple cents. That's hilarious, right? It was in the context of, for those of you on TikTok talking about Charlie Marr, first of all, I don't feel the need to waste my breath or time. There are a bunch of people who love following hype people, and there's a guy like Gutierrez, or some guy who videotapes himself in front of Ferraris, which I think Charlie Marr is actually one of those guys. He was never really on my radar, nor will he. He'll never, if he wants to come on my show and talk about stocks and stuff, happy to do that. I have an education, and I've been paid W-2 income, a lot of money to do what I do, right? And the only reason why I can do this for you guys, and I can be the people's hedge fund analyst, is because I'm in a role where I'm an operations CFO, I'm a CFO of a company, and I'm not regulated by the SEC. Also, a really great TikToker who comments on my videos has the SEC, and he has the SEC logo. I think that's hilarious. But it was funny because I think someone tagged me in, and sorry, I say a lot because I'm from California. We say a lot, don't we, Nia?
Yes, we do.
As Californians. The video he posted was in the context of people who have never made a dime off of finance or what they're saying. I don't think, I said again, I don't look back at all my videos. I don't ever say anything that isn't taught by Harvard Business School, let alone right? I mean, it's stuff that I've learned that's even kind of higher level than Harvard Business School. You go to HBS or you go to a good undergrad business school to break into the industry, right? And I can go get another hedge fund job, and then I can't talk to you again, right? And so, I mean, I don't know. So he can say what he wants and post videos of Lambos, and you guys, if you think that that's a person that you want to follow, go ahead. I am always open to talking to people because I am confident in my ability to talk about legitimate concepts in economics and finance. So that's great. And Chipanu lost 4K because of my stock recommendations. Yeah, I don't give you financial advice. I do analysis. And I don't really know what did you get from me? I don't really, you're spamming the chat, you don't even know, what did I say? I don't think I've ever actually said buy or sell. Do you guys remember me ever saying really buy or sell? I say things are expensive or cheap, and then I do analysis, and I talk about the economy, and from an institutional background, I try to tell you, talk to you all about, because I love this stuff. I truly love this stuff. Why do you think I talk about it all day long? So whatever. Anyway, Charlie D. Mar, that guy rents Lambos and posts it and calls me out. Like, I guess he has like 100,000 he is like over 100,000 followers. I mean, I guess it works. Good for him, man. Like, there are so many people, there's so many people out there that will hate. Like, in my YouTube chats, there are now I'm getting like trolls, which is kind of interesting, right? It's like, I don't know, whatever. So anyway, back to price to earnings ratios. Not rented Lambos. Maybe we should value stocks based on how many Lambos that company produces. Maybe. Or like price to Lambo ratio. Let's do that. Price to Lambo ratio. That's interesting. So, and again, for all you YouTubers that are coming here. Oh, so guys, by the way, I know this is a messy one and probably one that's not going to go up again. Maybe we're recording audio.
We're recording it.
Oh, we're recording audio. Okay, but this is a messy one. So this will be like one of my original TikTok ones, just like a straight Q&A. And we got like on Thursday when we get the live stream working, I have there's an echo, I know. This is like a temporary digs. These are temporary digs, and hopefully we get permanent digs, you know, more people that I have coming on the shows and joining the website where, we post a lot of content. Let's see. Yeah, sorry there's an echo. I'm trying to use this thing. Is this working? I'm done talking about Charlie Mar. Kevin Hart is asking what happened to the hydrogen gas guy. So he got a cold or something, so he had to delay like a week or two on me. So that's scheduled for this Thursday. I don't think we're gonna do it live, and I don't know if you guys are familiar with like YouTube creation, but like Nia comes from like production on professional TV sets, and it still takes us like 24 hours to upload a long form interview on YouTube. That I think, like, I was always wondering why Joe Rogan never got his interviews until like 3 or 4 days later. Like, it's because a full day is taken just on the upload. And so in terms of, so sorry, thank you for asking about that. I know it's a little bit aggressive, bro, talk about tomorrow. Like, again, no one can ever tell you exactly what's going to happen in the stock market, unless it's like some news came out after hours, and then I'll be like, okay, if coronavirus is seeing a gigantic like spike after hours, like a step change spike, and then I can tell you the market's going to open down, but it's not like you can do anything about it. Couple things. So the Fed has now kind of reiterated kind of its willingness and put up its facility to buy corporate debt and provide liquidity to the market, which is obviously very, very, it's very, very good, but we already knew that. Like, I don't really think that that's particularly new news, except this market's been wonky. I've talked about it. Nia is spinning up a couple cents clips because these things are a little bit longer form. So once that's up, we'll announce it, and that'll be on YouTube, so you can find like 5 to 10 minute clips of these things. But I definitely ranted about it like a show or two ago about how this market is super artificial. Obviously, there's like a lot of like Robinhood. There's now like there are articles about Robinhood traders like pumping up stocks artificially. I don't necessarily think that Robinhood traders, and I use that term because that's what the media is using, retail investors that are just getting into it are pumping up stocks generally. I don't think that it's driving up the S&P 500. And at this point, I don't believe that the market is wildly overvalued. I do think some news came out and published at 4 p.m. Eastern, so right after close, that the FDA pulled the emergency COVID-19 use approval for hydrochloroquine that was talked up by Trump, right? Trump had said this malaria drug was affected. I mean, again, it's not him. He's just parroting what his people are telling him, I'm sure. But they were talking about hydroxychloroquine, sorry, long word, being an effective treatment, and the FDA pulling that. Like, if I were to guess, I would guess the market's going to go down tomorrow. But right, like a lot of times it opens up or opens down, opens up, right? I don't know. So if I had to guess, it's kind of a coin. Every day, it's kind of a coin flip. I would say it's probably going down a little bit tomorrow. Anyway, yeah, and going back to the Robinhood traders thing, right? It's a lot of, like, the whole reason why I continued making videos was because people kept asking me questions, and it was very, very clear people are buying stocks without knowing at all what they're getting into. And if you're not one of those folks, then, good for you. Like, a lot of what I'm saying is either under you or over your head, and the only time we learn is really just to learn by osmosis. And Nia doesn't really know much about investing or finance, and right, I mean, she's the first to admit it. Yeah, but after a year of just sitting here and listening to me talk and like asking me questions, like, you'll start looking, you'll start learning, right? So that's the whole point, right? So let's see. Yeah, so again, good news that the Fed is obviously buying corporate debt. We already knew that coming in. And bad news that the FDA is pulling the use of hydroxychloroquine because obviously it's not good for you and it doesn't work, clearly. But we kind of already knew hydroxychloroquine wasn't a magic bullet. Yeah, and then on YouTube, I'm really sorry that it's so bad for you.
The audio is apparently fine. It's just the video.
We'll get it fixed for Thursday. So I'm just responding. So anyway, just listen and don't watch. That's hilarious. Yeah. Anyway, so yeah, can maybe those of you on TikTok, I know you guys yeah. So anyway, I agree with you. I saw a comment earlier that earnings may be estimated too high. I completely agree with that. And that's why I still don't think that we need it. Like, Nashville was going to go to phase 3 of reopening, and our mayor has come out and said we are in a second wave already, right? I don't know what's going to happen with COVID, and I don't think anybody knows, right? The Northeast is still on lockdown. Cuomo went on a rant about reinstituting more lockdowns. So obviously the Northeast, just being having a culture of being more shoulder to shoulder with each other on a daily basis, they are taking it much more seriously, and cases are still going down there, right? California, Texas, Tennessee, I think Georgia, especially after all these riots and stuff, the cases are going up. But if we don't see a violent spike after another 2 to 4 weeks, then I don't really know how bad COVID will be for young people, right? Because a lot of people protesting are younger people that are generally healthier, right, and exercise more and less susceptible to this disease. I read an article today about how, or maybe I read a lot, and some people tell me a lot, but someone was telling me they were reading a bunch of articles about how COVID may be like a blood vessel disease, and that would make a ton of sense because there's COVID toes that was happening, right? And hey, Varun, and if it constricts the blood vessels and you basically can't get oxygen, right? It makes sense why people who exercise and have better blood vessel dilation aren't as susceptible to this virus. So and while, I mean, a lot of people who go on ventilators die, right? It would make a lot of sense, right? But again, I'm not a doctor. I don't ever pretend to be a doctor. So let's see. But all that to say, right? It's kind of like 50-50 to me. Like, I don't know if COVID is going to have a violent spike or just a kind of a slow burn up, right? Which is manageable until we do get a vaccine, which I believe they're working on, right? Like, we got three vaccines in an emergency trial, 3 to 5 or something like that. Or does it violently spike? If it violently spikes, then obviously earnings are going to continue to go down and the stock market's going to plunge. That's the real thing that I think brings down the market, unless we get into a real, like, Cold War or a blatant war with China. I don't have an opinion on that either. And so I think, like, we need to, I'm a little bit, right, and I've been on the fence. Like, I heard on Bloomberg today about how we're in this 2,800 to 3,100 range on the S&P trading range. That's what they think, and that's why it's such a violent spike down a few trading days ago. And you all know I basically started going bearish at 2,800. I'm probably rescinding, like, right now, live with you, my bearish view. Like, I definitely pulled out too early, right? I started selling. You never do everything at once, right? It's like you start selling down and you never buy everything at once. So you look back, I kept saying dollar cost average, which in retrospect, with the bounce up, like, my range was right, my buy range was right, but buying slowly clearly didn't maximize your gains. But also at the time, right, you're in free fall, you don't really know that. So, like, I'm a little bit 50-50 want to own, because I think maybe finding the next Tesla, which I think Tesla is still Tesla, right? It's very high, like, the valuation is super high, but that doesn't mean that I wouldn't keep it and hold it and stick it in the backyard. Finding the next Apple, the next Google, the next Facebook, the next Tesla is really hard, but I tend to like really love those bets, because I feel like I have a really good pulse in what's going to quote unquote win thematically. For those of you just joining me, like, I was the middle schooler that was like, Google's IPOing, mom, dad, like, let's invest. And Apple, oh my gosh, the first iPhone came out, and I was like, this is a game changer, invest. And I sold those too early. The real mistake was selling them too early. And when you find what value investors would call this a capital compounder, but what I would say is a thematic long-term game changer winner, I would say you hold on and you don't sell that thing. And that was, like, the lesson learned. Like, I made a bunch of money on investing in Apple for sure, but I didn't make as much money as I could have if you just held it and didn't watch it every day. So what we're doing on ROIC is, it's planned. I know it's not up on ROIC yet, but my view on DraftKings. I'm doing some work on Peloton. I'm doing some work on, what else? I'm doing work on Penn Gaming. Obviously I don't love Nikola. That's not even in the question. But I love Amazon. I love Tesla. I do love Tesla. I think it's expensive and it always will be expensive. But having owned a Tesla for 3.5 years, and I was just about to buy my next Tesla, I sold that Tesla because I thought the doors were a little bit obnoxious. I had the X. And I was going to, and sister Akaya is feeling like she missed out on Tesla. Look, I honestly think if you, like, sometimes valuation and, like, Wall Streeters get so in their head about being, like, smart and intellectual that they lose the forest for the trees. Okay? So that's why, like, I got a little bit, right? Like, when you're in the investment committee in a multi-billion-dollar fund with a bunch of Harvard Business School grads, how do you stand out? It's like to have a slightly more detailed model, to have a better write-up, to be more pessimistic, and to sound smarter and have a bigger vocabulary, right? It's the same shit as, pardon my French, it's the same shit as any company, right? You really, that's how you really differentiate yourself. And sometimes by doing that and getting caught in the weeds, you lose the sight of the fact that valuation sometimes, like Tesla will never be cheap. But in order for Tesla to keep being Tesla, and in order to have benefited from that rip up on Tesla, you just have to believe in the company and that it'll thematically win and be okay with the valuation. Like Tesla at like 800 isn't crazy overpriced if you believe that they get some autonomous driving and they become kind of a top 3 to 5 automaker, right? If you believe that they become a top 3 to 5 automaker and get some other thing, whether it's like solar panels take off, which I don't really think so, or like AI driving, or they get into the trucking game, I think I think Tesla is still a buy, and I think it's like kind of you hold it and you just forget about it if you believe Tesla. But there are a lot of Tesla haters out there. Tesla is one of those stocks that, like, I don't know, it's very polarizing. I think the reason why I get it's curious to know why it gets like this niche, so stocks investing, gets so much vitriol, right? I think people hold a stock and they believe when they say something good about it, it's going to drive the stock up. And when they say something bad about it, it goes down, right? I'm not Bill Ackman. Yeah, if you're Bill Ackman and you go up and say something about a stock, then yeah, like obviously, like it'll move the stock, but I ain't a Bill Ackman, right? Like I have 130 people on here and you guys are all on TikTok, so I imagine you're not dealing with multi-billion-dollar books. So yeah, and Tesla gets so much hate because it is disruptive. But as someone who's owned it, like I've owned a Model X for 3.5 years, look, it's game changing. It's just better. Like, I wouldn't say, okay, here's a good example. A lot of you are too young for this. I was the nerd in middle school asking my parents to buy me the BlackBerry. Actually, I knew BlackBerry was for old fogies. I wanted the Pocket PC by Compaq. Did you know this?
No, but you would.
Yeah, I would, right? Nia's laughing at me. So my parents bought me a Pocket PC and a Palm Pilot because I knew the future was like computers in your pocket, right? Back then we were on Razors. We were T9ing. Oh, we weren't, that's not true. I had an LG Flip that had the QWERTY like keyboard, right? But I knew that, and then when the iPhone came out, it wasn't as revolutionary as I think we look back on it, right? The real revolution was the fact that it just worked. And it was slick, and it just worked, right? Right? Like, we had LG phones that could go on the internet. We had those brick phones. You guys remember that? We had Blackberries back then. Those were technically smartphones. I had a Pocket PC and a Palm Pilot that had the earlier, like, 1G version of internet, too. Actually, no, I wanted my parents to buy it, but it's super expensive back then for subscription. So anyway. But the iPhone was the first smartphone that brought to the fore, I forget what you call it, but basically we still use it today. It's using the electronic touch from your finger onto the screen as opposed to buttons. So that was like a game changer. And that was a big shit storm back then. People were like, no, I really like buttons. Like buttons really matter. Like, I don't know, maybe yeah, that was a real thing, right? But people really cared about the buttons. I mean, polarizing, like Tesla. I really like gas. I really like gas stations. Is that maybe polarizing? But the real thing is it's just slick and it works. Tesla's the same way. Like, just as an owner, and I'm sure, I know capacitive touch, thank you. I was thinking interactive touch for some reason. Capacitive touch screens, right? It like integrated that, it just worked. Teslas just work. And the first time you floor it, like you're like, this is different. This is like a souped up golf cart, an electric golf cart. So that's how I feel about Tesla. So it's a bit different, right? And I believe that it definitely can be, and you have a guy at the helm who literally wills things into existence. For those of you that don't know anything about Elon, go read his one biography out there. He's a very private guy, so it's kind of hard. But there's one really good, I think it's by a girl named Ashley something. Elon Musk biography. It's by Ashley. My memory's so weird. Okay. Elon Musk, The Quest for... Oh, yeah, I was right. By Ashley Vance. Elon Musk, Tesla, SpaceX, and The Quest for a Fantastic Future. And they have an audiobook on it. So go listen to audio, right? The guy is really, really impressive, right? He was born in South Africa, bullied in... I think private schools are big there. So it's not like the private schools in the U.S. Like, he went to a school like that. He wanted to come to the U.S. because that was the land of opportunity. And he was in South Africa. And he reached out to a long-lost cousin of his, or cousins of his that lived in Canada. Came to Canada, went to a Canadian college, and he might have left early or whatever, and then he basically came to the US and started this little app. He coded and started this little app called Zip2, which was like an early version of Yelp. And then he sold that, and he reinvested all that money into X.com, which then merged with PayPal, which sold for even more. And then he took all that money and did SpaceX, invested in Tesla. He didn't invent Tesla, invested in Tesla. Sponsored his cousins on Solar City, which has since been acquired. It was public and since been acquired by Tesla, right? He wills things into existence, and he's a really impressive guy. I believe in him. If it can be done, I think he can do it. So I definitely think it's a game-changing product and a game-changing CEO. I don't really know why people get so mad about everything. It's like, I don't care. I don't know Elon. I've been on one call with him when I was on Wall Street. Okay. Cool. So, and again, NIO versus Tesla. Again, NIO seems to be like a hype stock, so I wouldn't really care. Okay, and for those of you who missed it, like I like DraftKings at the right price. I like Tesla at the right price. I'm looking at Peloton. Stay tuned on that. I'm looking at Penn Gaming. Stay tuned on that. I'm probably going to look into REITs pretty soon here because they're like typical value stuff. Yeah, so we'll see. Let's see. Let's take some questions. So this has been kind of a cluster of a live section. So kind of hearkening back to some of my original ones. And I'm really sorry for everyone on YouTube. It still amazes me how hard and convoluted live streaming is. Maybe we do have to,
No, but the people who stayed on YouTube are like the real ones.
Yeah, oh, for sure, for sure.
But also, it's definitely worth getting a TikTok, but it'll take up hours of your day.
Yeah, hours.